Welcome to my tutorial on stock market basics and how to buy your first stock. In this video, I'll walk you through the key concepts and steps you need to know to start investing in the stock market. The stock market can seem intimidating, but it's actually quite straightforward once you understand the fundamentals. Whether you're a complete beginner or just want a refresher, this video will give you the knowledge and confidence to start investing. The stock market is where publicly traded companies sell shares of their business to investors. When you buy a stock, you're essentially buying a tiny piece of ownership in that company. The two main stock exchanges in the US are the New York Stock Exchange and the NASDAQ. Companies list their stocks on these exchanges and investors can then buy and sell those stocks. The prices of the stocks go up and down based on supply and demand. If more people want to buy a stock than sell it, the price goes up. If more people want to sell than buy, the price goes down. There are a few key reasons why investing in stocks can be a smart financial move. Potential for growth. Over the long term, the stock market has historically returned around 10% per year on average. This means your money has the potential to grow much faster than it would in a savings account or other low-risk investments. Building wealth. Investing in stocks is one of the best ways to build wealth and save for long-term goals like retirement. Even small, regular investments can add up significantly over time thanks to the power of compound interest. Passive income. Many stocks pay dividends, which are regular cash payments made to shareholders. These dividends can provide a nice stream of passive income. Of course, it's important to remember that the stock market also carries risk. Stock prices can be volatile and go down as well as up. But over the long term, stocks have proven to be one of the best ways for regular investors to grow their money. Now that you understand the basics, let's walk through the steps to actually buy your first stock. First, you'll need to open a brokerage account. You'll need to open an account with an online brokerage firm like Fidelity, Schwab, or Robinhood. This is where you'll deposit your money and use to place trades. Next, fund your account. Once your account is set up, you'll need to transfer money into it from your bank account. Most brokers have easy online transfer options for this. Then, research companies. Before you buy, you'll want to do some research on potential companies to invest in. Look at factors like the company's financial health, growth potential, competitive position, and management team. You can find a lot of this information on the company's website or through financial news sites. When you're ready, place a trade. Log into your brokerage account and find the ticker symbol for the stock you want to purchase. For example, AAPL for Apple. Then, enter the number of shares you want to buy and submit your order. There are a few different order types you can use, but a simple market order, which buys the stock at the current market price, is usually the easiest for beginners. Finally, monitor your investment. Once you've bought the stock, be sure to keep an eye on how it's performing. Review the company's quarterly earnings reports and any news that could impact the stock price. You may want to set a target price to sell at in the future. As a beginner investor, there are a few common strategies you may want to consider. First, dollar cost averaging. This involves investing a fixed dollar amount at regular intervals, like $100 per month. This can help smooth out market volatility and average out your purchase prices over time. Next, index funds. Index funds are mutual funds or ETFs that track a broad market index like the S&P 500. They provide instant diversification and often have very low fees. This can be a great hands-off approach for new investors. Another strategy is blue-chip stocks. Blue-chip stocks are shares of large, well-established companies with a long history of profitability. These tend to be less risky investments, making them a good starting point for beginners. No matter which strategy you choose, it's important to diversify your portfolio and only invest money you can afford to lose. The stock market can be unpredictable in the short term, so don't invest money you'll need in the next 5 to 10 years. Investing in the stock market is one of the best ways to grow your money over the long term. By understanding the basics and starting with a sound investment strategy, you can begin your journey towards financial freedom. Remember, it's normal to feel a bit nervous when investing for the first time. Take it slow, do your research, and don't be afraid to start small. The most important thing is to just get started. Good luck on your investing journey.